Hey everybody, Deb Bailey here from New England Real Estate Academy. I thought we'd try some additional practice questions for the national portion of your exam. When you're preparing for the exam, that real estate math can be a little bit scary. But one thing we all seem to be able to figure out initially is how to calculate our commission. So let's take a look at a very simple math on that. So we have a home. It's selling for $750,000 and the commission due is a total of 5%. This commission in our example is going to be split 50-50 between the seller brokerage and the buyer brokerage. So to figure that out, it's pretty simple math. You're simply going to take that $750,000 and multiply it times 0.05, representing the 5%, to come up with $37,500. Because it's a 50-50 split, we're going to divide that by 2, and that's going to give us $18,750 to each of the brokerages. Let's say you work for one of the brokerages and your split with your broker is 70% that goes to you, 30% that goes to the brokerage, and there's also an additional fee of $100 for errors and omission insurance and admin fees. How are we going to figure that out? Well, you're simply going to take that $18,750 times 0.70, which represents your commission split, and that's going to give you $13,125. You're going to minus $100 there, and that's going to give you a total income from this sale as a co-broke of $13,025. We all need to remember in real estate that most of us will end up being independent contractors, so don't forget you need to set aside some money out of that $13,025 for taxes. Now that we've gotten the important calculation out of the way, let's look at some questions that may in some way appear on your national portion of your real estate exam. Always remember that you are going to be given a choice of 4 multiple answers, and you need to choose the best answer of those. If you're taking the broker exam, there may be more than 4 answers available to you, and it's going to be a little bit more difficult in some instances. But let's take a look at this question. Property management company receives 10% of the rental income collected every month, and the rent roll for this property is $55,000. One tenant paid $250 out of their $1,000 due, while 3 others completely skipped out on their rent for that month. How much money is the management company owed? You have 4 choices here. Pause the video while you come up with your answer. The correct answer is B, $51.25. So how did we come up with that? Well, a tenant paid his rent partially, while 3 paid absolutely nothing. Now, if the management company is receiving monies based on what they collected, we need to do some calculations here. So the first tenant owes $1,000, but they only paid $250. So right away we have a deficit of $750. The other 3 combined owed $1,000, and they didn't pay at all. So we now have another deficit of $3,000, giving us a total of $3,750. The rollout is usually $55,000. So if we take that $55,000 and we minus $3,750, that gives us a gross income of $51,250. And 10% of that amount is $51.25. Great. Now let's move on to question number 2. Calculate the asking price of a plot of land that measures 140 by 74 square feet if the seller is asking $130 per square foot. Is it A, B, C, or D? Stop the video and do your calculations. Your correct answer here is D, $1,365,000. How did we get there? We need to obtain the square footage of the land. So we're going to take 140 feet by 75, and that gives us 10,500 square feet. If each square foot of this property is worth $130, then you're going to take that 10,500 times 130 to give you a total of $1,365,000, which is the asking price of this plot. Okay, how we doing, everyone? Let's look at question number 3. A businessman purchased his home for $620,000 and sold it for $670,000 10 years later. How much from the sales was taxed? Is it A, B, C, or D? Pause your video and figure your answer. How'd you do? Well, the correct answer here is D, none. And they do this on the exam. They'll throw in something like the comment businessman to kind of sway you. It still is residential property. So there's a total profit here of $25,000. And if it's $25,000 or less, it's not taxable. So there's a tax exemption for single people who make $250,000, and a tax exemption exists for married couples that file joint returns that do not exceed $500,000. This exemption is only viable if the property has been the seller's main residence for 2 of the past 5 years. Question number 4. What is the monthly net income if the return rate on a $315,000 investment is 12.5%? Is it A, B, C, or D? Pause the video and do your calculations. Okay, I included this question to make a point. So the correct answer here is C. 38,821. Now you're going to look at the calculation below, and it tells us that we came up with $3,821.25. Why did I want to include this? Because they're asking you on the exam for the best answer. So despite the fact that it is rounded down, it is still the best answer for this question. Here we go, number 5. What must a seller's minimum sales price be if he wants to net an income of $362,000 after paying his broker a 6% commission? Now we're assuming here that's his only expense. A, B, C, or D? Pause the video and calculate your answer. So here, our best answer is $385,106, which was C. How did we come up with that? Well, the seller is left with 94% of the proceeds if he's going to give that brokerage firm 6%. When you divide $362,000, which is the net amount, by 0.94, which represents the 94%, which is the final sale proceeds, you will get $385,106, and that is the minimum sales price that the seller needs to reach his goal. And finally, let's take a look at question number 6. Smith leased 4 apartments in a nearby state for $4,500 per month. If this amount represents an 8% yearly return on his investment, calculate the initial cost of this property. This gets into some tough math, I think. Is it A, B, C, or D? Pause the video and do your calculations. Was this a tough one for you? Our correct answer here is B, $675,000. So how did we do that? To get the value of Smith's property, you should first determine the yearly rent, multiplying the monthly by 12. So if the rent is $450 times 12, that's $54,000 a year. How do we end up with the $675,000? We're going to divide the yearly rent by the returns per year, which is 8%. So $54,000 divided by 8 over 100 equals $675,000. This is where things start to get a little tough. Now, depending on how you did with these 6 questions, you're going to want to go back into your manual or certainly visit our video by instructor Ed LaFleur about simple ways to figure out math in real estate. It's a great video and it may help you if you struggled here. So be sure to use our resources on our website as part of your preparation for your exam. We greatly appreciate you. Thank you for choosing New England Real Estate Academy. We're here for you.